Welcome to TheoTrade. This is Don Kaufman. It is May 31st, 2017. What you're seeing here is what we're calling the summer of TheoTrade. So I wanted to do a couple of announcements prior to doing tonight's Theo video here. Again, what we're now calling the summer of TheoTrade. First and foremost, one of the announcements we want to make, we're going to do an ETF volatility dispersion course. You know, if low volatility's got you down, that's all you're hearing right now is about low volatility here. Well, our research team has found quite a definitive edge over there. So we're going to talk about selling premium in some of the lowest volatility markets and yet still not taking any extraordinary risks out there. And we're also going to talk extensively here about how to find statistical advantages in markets, kind of develop your own trading regimen to exploit some of the edges that we actually found. And works best, of course, in some of the docile markets. Be on the lookout for this ETF volatility dispersion course in just the next few weeks. This is the first and upcoming thing. Next, in the summer of TheoTrade, we're going to actually have a Slim Miller course. Of course, one of our instructors here, he's got 42 years experience, but a course that really encompasses Slim Miller's 42 years of experience as a trader. And again, 2 decades as a coach and, you know, in the marketplace. I think you guys will be blown away by this particular class. Again, this will be coming kind of midsummer out there, but we've got a course coming up from Slim Miller. Do not miss it. Again, the 5 essential building blocks to successful trading. Slim's got a 42-year career as a trader. Next, we're actually going to do a trader boot camp this summer. So get back into what I call trading shape with an awe-inspiring trading strategy boot camp. It's going to be Doc Severson, Jeff Bierman, myself, which is Don Kaufman, Tony Rago. We're going to just go for it. No holds barred. Intricate details, what strategies are working and where to allocate capital in today's marketplace. Obviously, market conditions, you know, pertaining to that particular time over here. Last, but definitely not least, this is probably one of the most highly requested things we've had here at TheoTrade. Bringing back the Greek Week. So Greek Week with myself, Don Kaufman, it's back. So I say, long live the Greek Week. No, we're not talking about the Greeks. We're actually talking about the option Greeks. So again, people asked for it, and really Greek Week, it now lives here at TheoTrade, kind of in true TheoTrade form. So this is going to be in depth about option Greeks, risk management. I'll talk about stocks, options, futures, and how really to mitigate risks in any marketplace. And depending upon portfolio size, whether you have $2,000 or $2 million, not going to make a difference. You guys will love what we have to offer. Again, all of the following, we're going to have details, dates, times, and specifics to come. Pretty much in order as I just elaborated here a moment ago. What we're calling the summer of TheoTrade. Now, let us get to the markets today. All right, so let's go ahead and start specifically with the market at large. S&P is right now 2411. So for those of you, if you don't tune in day-to-day basis to TheoTrade in our live chat room, we identified a very, very specific level inside of the S&P futures where a tremendous amount of trade has migrated to in recent trading sessions. That specific level happens to be 2411, and it's worth marking on your screen. And you can see there's a line drawn across my screen. By the way, this line over here, okay, what is it? People constantly ask me that question. All I did was took one of the drawing tools available, and this happens to be on thinkorswim. The drawing tool that I'm using is just a price level. That's it. And I drew a line across at the 2411 point. Now, what does 2411 represent? Okay, this is not support nor resistance. It's kind of a gateway, okay, for where gamma risk is comfortable. And what that ultimately means, if you look at how professional trade works today, you'll get huge amounts of inventory that build up in particular products. In this particular case, we'll talk about the SPX. So yes, we're looking at the S&P futures, but imagine the SPX and all these traders have gone out there, they're buying and selling tons of options, okay? On top of it, they're using the S&P E-mini futures to hedge the SPX risk. So we have traders that are both buying and selling options. They do it, okay, in very, very large fashion. Then they use the futures to mitigate that risk. Now, what this 2411 seems to represent, it's a comfortable place between these buyers and the sellers. And it's almost like a gamma-free zone. And for those of you that understand gamma risk, okay, gamma risk is often what perpetuates dynamic hedging. And that basically means like this morning, we were selling off this morning. We start selling off, okay, traders actually have to sell with the dynamics of the market. The more we go down, the more they sell, okay? They mitigate risk, they substantiate, they flip around, they rally back up. Well, this 2411 seems to kind of be an intermediary, if you will, a point unto which, all right, the gamma risk is mitigated. Now, if you take a look specifically, and I'm going to zoom in right now just to trading day, obviously we see that this level of 2411 holds huge weight. Okay, it's a comfort level. It's where buyers and sellers ultimately meet. So one of the first things I want to mention over here, because in days to come, you may see us migrate right back to it. Again, if you're a little newer to this, maybe a better way to present this 2411 number to you is if you look at a 30-day 1 hour, what I want you to see is how much in play, and again, I'm going to zoom in specifically to some of the most recent trading days, how much in play this 2411 happens to be. It's, again, almost like an inflection point from where we both trade up, okay, or down. But again, it's kind of the midpoint between that, and it seems to be where there's very, very little delta risk, very, very little gamma risk for the larger traders that are ultimately moving markets on a day-to-day basis. 2411, it's something I wanted to elaborate upon. The next thing I want to point out over here, on an intraday basis, financials earlier today, well, there was news out. The news is many of the financial stocks, they're not faring well, they're saying this quarter. And that news came out pretty much right at the cash open and pummeled the financials early on. So the sell side activity that we saw inside of markets today was perpetuated specifically by news into the financials. It was fast, it was furious. Again, the financials traded though all the way down to the 23 level. And there, of course, is the closing bell. Where are we going to finish? No surprise, 2411. So the financials got whacked in early trade and we're down as much as like 1.3%. They're closing down the day just about 0.8%, nothing too monumental over here. However, in addition to it, more signs of how fragile the market happens to be have really been perpetuated throughout, okay, especially in today's trading session. So let me bring you over to Amazon on an intraday basis. At the same time, we saw the financials taking it on the chin. Amazon was getting absolutely decimated in early trade today before ultimately turning around. And again, all I'm using this is not to describe to you, why I am bearish, because I've given you all the reasons, you've heard it all before over here, but to recognize how fragile markets happen to be. Amazon sells off from 1,000 down to, that's right, okay, look very, very carefully on your screen just to behold all the way down to 982. Literally prints 1,000 down to 982 in less than a half an hour. And specifically, okay, this is, by the way, this is a 1 minute, just so we're clear about that. Okay, specifically, we traded, down what? From just shy of 990 to 982 in less than 1 minute when algorithms really came in and started to attack and sold over 60,000 shares, okay, in a very, very short period of time over there. So again, signs of how fragile the market appearing everywhere. Google, let's actually display Google. Very, very similar situation. Ironically, okay, you can see the algorithms, all right, in all of their glory over here. We traded just shy of 1,000, right down to the exact same number. You can look at Google and Amazon time and again, and it's uncanny, okay, how efficient these algorithms happen to be, that they actually knocked the price, okay, down of both Amazon and Google, which are effectively, in the top 5 of the largest market caps out there, how quickly they decimated them. A move almost $20 in a matter of a few minutes, okay? And again, all I'm displaying here is how fragile the markets are. And if we do start to have sell-side activity, which persisted during a small period of time today, how violent that can be. And a lot of times I get the question, Don, why are you holding a short position right now? Why not just get short when the market starts to make the move? Do you really think that in a split second you're going to be able to sell into this? Would you even know that this was going on? Okay, at the time it is going on. And again, I'll bring up the Nasdaq futures because the Nasdaq futures is incredibly resilient today. The Nasdaq futures, okay, they moved again. Let's go right to the beginning of the real momentum over here. They moved from 58, we'll call it 10, down to 57.63, okay, inside of less than 15 minutes of trade over here. So again, some pretty harsh sell-side activity comes into some of the technology. Ultimately, where it was really sparked, though, is inside of financials. And when you start to look at this from a sector, okay, standpoint, you have to wonder, how did the S&Ps even finish unchanged today relative to the fact that financials, again, took a bit of a hit? And of course, we've been looking specifically into the XLE. I'll come down to Goldman Sachs here in a moment. But we've been looking at the XLE, which has also been a one-way ticket to the downside over here. Remember, petroleum status report, that is the oil report coming out tomorrow. That could have a very large impact here inside of the XLE. Of course, I was just glancing a moment ago at Goldman Sachs, which has been a one-way ticket to the downside. Goldman at this point, and I want to kind of exemplify this inside of the financials, is hitting extremely critical points. Anything under, and it closed today right around the 211 marker, but anything under, okay, this 209, 210 level, and there is nothing but downside over here. Again, in terms of the financials that took this news the hardest, Goldman was at the forefront of the sell side activity here. Now, you can cruise down, you can look at some of the other bank stocks, but again, it's Goldman that really started the sell side activity in the financials over here and perpetuated the down move. The point being, once again, there's a great trade opportunity in here. If Goldman does break under the 210 level, you could be off to the races for quite some time. My belief ultimately is at the heart of the marketplace, as much as everybody wants to point out, the NASDAQ this, the NASDAQ that, you need to have support of these financials for the S&Ps, okay? Not to necessarily just gain to new highs, but if the financials start to break down, it will take the S&Ps along with it out there. Now, one last underlying I want to look at. So we looked at Goldman for the trade opportunity underneath the 210, and if it breaks under 210, the move could be fast. I think you're going to have to jump on that one fairly quickly. Again, if Goldman does break under the 210 level, that's the same thing here. If the XLF is under 23, there's nothing but open room under the 23 level inside of the XLF if you're more comfortable trading the XLF. Okay, last but not least, I've been stalking Tesla for quite some time over here. Well, I initiated the trade today. Now, how you may want to initiate a trade in Tesla could differ drastically from mine, but here's an underlying that I've decided I want to be short. Now, I know you guys have heard this story before. I like to be the short side of the trade from time to time, but I'm actually shorting shares directly inside of Tesla. So I've gone out and I have initiated a short position in Tesla. This to me is going to be a duration trade. This is not something I'm holding for a 15 or 20 point move inside of Tesla. Okay, I'm short Tesla looking for $100 type moves to the downside over here. This is about as parabolic as the move in Tesla has gotten in the last 4 to 5 days of trade. So here's a trade where I fully recognize that Tesla could still have some upside and very likely will have some upside. Nevertheless, with this type of kind of parabolic move, okay, you're never going to time things perfectly. I'm comfortable sustaining the risk. And when people talk about like risk reward, that's what this trade is about. It's about risk reward. You look at the explosion of market cap and recognize, okay, just from the beginning of the year, the stock is up from just north of 200 to 340. Okay. And you start to say, well, this is the epitome of the insanity, if you will, of a handful of stocks. okay, inside of the Nasdaq. Nevertheless, I've chosen to outright short the stock. If you're not comfortable being short stock and you really truly want to define your risk, okay, you can start to go about like 30 days out, and you're going to have to buy, and you may not like this, but you're going to have to buy a deep in the money put, okay, to simulate the stock position, and a deep in the money put inside of Tesla. Listen, this thing isn't cheap. You know, you need an 80 to an 85 delta to make this worth your while inside of Tesla. So kind of keep that in mind. Again, in the after hours here today, you're seeing a little bit more momentum to the upside. Okay, have no fear. It wouldn't surprise me at all if the markets in the overnight trade just migrated right back down into that 2411. Again, it's this comfortable area, if you will, inside of the S&P future. So look for that kind of an overnight trade for us to, again, migrate back down to 2411. What do we have the rest of the week? Well, a lot of news announcements. There's a bit more volatility, obviously, inside of today's trading range. So what do we hope for? More volatility, two-sided markets. Even though we rallied back up today, again, we have tendency to be paving the way for what could be slightly more volatility here in the near future. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.